What if you could invest in a Dubai apartment with just $150 and do it entirely from your phone in under 5 minutes? No agents, no paperwork, no mortgage. That's the experience Stake is building, and it's already turning thousands of everyday users into fractional landlords in Dubai and now Saudi Arabia. Welcome to the Mechanics of Money, where we make sense of the most intriguing money questions. In this episode of the Mechanics of Money, we'll explore how 3 founders took on the region's old-school property market, how they convinced regulators to approve fractional investing, and what it took to scale from one listing in Business Bay to hundreds across Dubai and Riyadh. The idea for Stake came together in late 2019 through informal conversations between 3 colleagues working across real estate, finance, and technology. Rami Tabara had spent nearly 2 decades selling Dubai property to international buyers. He saw how frustrating the process was, especially for people living abroad. Manar Mamasani from Deutsche Bank's structured credit team understood the layers of financial and legal complexity. Ricardo Brizito, a seasoned CTO, had worked at Cedars in London, where he built key parts of their secondary market. Together, they kept returning to one idea. What if people could invest in Dubai property the same way they buy stocks, legally, securely, and from anywhere? To do it, they had to solve 3 big problems. 1, the legal structure. 2, the regulatory approval. 3, the tech that makes it seamless. Their approach was to create a separate SPV, or special purpose vehicle, for each property. That SPV would issue 100,000 shares, and users could buy fractions starting from just AED 500, about $150. And while the idea of using crypto or tokens was floated, they decided against it. Ricardo later explained, "We focused on regulation first. The legal foundation had to be there before we thought about tokenization." By January 2021, Stake was live. Their first property, a compact apartment in Business Bay, was fully funded in 36 hours. Investors from 12 countries took part. That momentum validated everything. People didn't just want access, they were ready to act. By mid-2021, they had funded 4 properties and crossed AED 10 million in assets under management. Then came their first big check, a $4 million seed round led by Combined Growth Real Estate. With that came scale. The team expanded, the product matured, and most critically, Stake became the first company licensed by the DFSA to operate a property crowdfunding model. But 2022 wasn't all smooth. Global interest rates rose, investor sentiment cooled, 2 Dubai listings sat half-funded for weeks. The first time that had happened, investors started asking, "What happens if I need to exit?" The team responded quickly. Ricardo built an in-app secondary window, a marketplace for users to buy and sell shares. Exit times dropped from over 20 days to just 7. Onboarding was also streamlined. KYC processing time dropped from 48 hours to under 15 minutes. By August 2022, Stake closed another round, $8 million in a pre-Series A. The user base had grown across 80-plus countries, and now the team turned to new features: a golden visa path for users investing over AED 2 million, a Sharia-compliant investment option with oversight from a licensed board, and an investor dashboard showing real-time returns and rent collection. In September 2023, Stake received approval from the CMA's FinTech lab in Saudi Arabia. By December 2024, their first property in Riyadh, a commercial building, launched with a minimum ticket of SAR 500, or about $130. It sold out in 8 days. This made Stake the first platform regulated by the CMA to let non-Saudis invest in fractional property inside the kingdom. By mid-2024, Stake had funded over 200 properties worth more than AED 355 million. User returns averaged 10.1%. They crossed 100,000 transactions and 500,000 app downloads. Then came the biggest round yet, $14 million Series A, led by MEVP with backing from Wa'id Ventures, Mubadala, and Al Jomai. Stake's model is working, but scaling it comes with new demands. Liquidity, monthly exit windows may need to evolve into real-time markets. Regulation, new countries mean new legal hurdles. Market cycles, prices in Dubai or Riyadh may fall. Yield protection will be key, and tokenization. The users still ask, when will my shares be on-chain? For now, the founders say, when the legal framework is ready, not before. Stake isn't just a slick app for investing in real estate. It's a rare example of a fintech startup building something ambitious, but with legal and regulatory rigor from day one. Three founders from property, finance, and technology came together to open up access to one of the world's most sought-after asset classes. They didn't promise moonshots or hype, just the ability to invest in real income-generating properties at a price point and speed the traditional market could never offer. Whether returns stay high or dip with the market, Stake has already changed the game. The doorway to Middle Eastern property is open, and it's finally within reach. Thanks for joining us on the Mechanics of Money. If you found value in exploring this topic, consider sharing your thoughts or questions in the comments below. Until next time.